Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some key stocks amongst private investors on the Bulletin boards. And I'm starting off with Bowleven, where it can be seen that there's been a rising trend channel in place since April, a rebound at the end of last week towards the floor of the channel at 37 pence. And the notional stop loss probably at the moment around the 50-day moving average at 35.9 pence. The bullish part of this equation is that we still have an unfilled gap to the upside, based at 33 pence from the beginning of the month. The negative is this horrible daily candle which came in the wake of the farm out news and dragged the shares back below the 200-day moving average at 40.94 pence. So still giving the benefit of the doubt here, a bit of RSI support here as well towards the oversold 30 level, and still rising 50-day moving average as well. So possibility of a retracement of the recent fall. If you're cautious, you'd probably wait for an end of day close above the 200-day moving average before taking the plunge on the long side. Next up is Range Resources, where there's been an improving situation here. Stock starting to behave itself after the breakthrough the 200-day moving average at 1.27 pence earlier this month. An extended RSI support line as well towards the 40 level, which has been multi-tested, which gives us encouragement, and also a rising trend channel from April based around the 20-day moving average at 1.53 pence. So ideally there's no breakback below the 20-day line, and we're still bullish while the 200-day moving average holds at 1.27 pence. That would the support above the 200-day line really suggests that this is a bull flag, and we'll see a new leg to the upside over the next few sessions. The target here, once we get through this sort of 1.7, 1.8 pence resistance, is as high as 2.5 pence, which would be the top of the April price channel. Finishing off with arguably what's the stock which is the most encouraging of the three, and it comes in the form of Xcite Energy. We had this gap towards 61 pence in May. That's been filled, and there's been a decent reaction off the gap, a gap fill rebound, and also that gap fill maneuver has delivered what looks to be a triple bottom for the shares towards the 60 pence level. If you add in also that there's been a triple rebound off an RSI support line for June, and this looks like quite an encouraging situation, you might want to wait for the 20-day moving average at 66.8 pence to be broken as a final momentum buy trigger to prove that the shares have sustainable action here on the upside. But really the 60 pence to 90 pence range looks to be back in business, especially after this sort of scare towards the 60 pence level at the end of last week. That's it from me. More updates at spreadbetmagazine.com.